In an unexpected move, sanctions have been expanded against Russia. This includes cutting off Russian banks and the Russian central bank from SWIFT. While this is a very painful blow for Russia, it is also a very dangerous move against the rest of the world, especially European banks. Repo market expert Zoltan Poszar warned that this is very, very similar to a Lehman event. When you cut off somebody who's providing a lot of payments into the system, hundreds of billions of dollars worth, you cut off those payments, you effectively cut off the ability of anybody who is relying on those dollars to be able to be solvent. Dangerous game we're playing here, so we are going to look at exactly what is going on right now with the sanctions, the rest of the banks around the world, and what central banks are doing as a result. Ready? Let's dive in. Over the weekend, the Biden administration expanded its sanctions against Russia, cutting off U.S. transactions with the Russian central bank, as you can see here. Now, I've talked about the potential of these sanctions being expanded before, and basically what it does is it cuts off the ability to do transactions. SWIFT is a communication system, and so by locking Russian banks and the Russian central bank out of being able to communicate with other banks, it locks them out of being able to do business and transfer dollars with these banks. As you can see here, these sanctions were put in place before the market opened on Monday to prevent assets from fleeing and getting out before they were locked in place. They wanted to impose the maximum amount of pain there to prevent Russians and Russia from being able to access as much wealth as possible. As a result, here you can see the ruble fell about 20%, which is one of the largest drops in history. In response, here you can see that they've raised their interest rate to 20%. It was at 9.5% before. Now, a couple things to note here. Russia has plenty of systems in place inside their country for people and banks and businesses to be able to transfer money back and forth. So these sanctions don't do anything to any transactions that are happening within the nation. Further than that, this devaluation, this isn't like what we're experiencing with like inflation, where you see your money is losing purchasing power when you go to the store. This is against other currencies. So to the extent that the ruble needs to be used to buy things denominated in dollars or other currencies, yes, this matters. But right now, they are locked out of these global payment systems. So if somebody goes to the store, it's not like everything is 20% more expensive or anything like that. It's just the ruble versus other currencies. So there's no impact, virtually no impact, for any payments, any transactions that are happening within the country. Now, just in case everything that's happening right now has sparked fears for Russian citizens, the Russian central bank has increased their interest rate to 20%. They don't want anybody getting afraid of what's going on right now. They want people to leave their money in the banks. They don't want to spark a bank run in Russia like we've seen bank runs sparked all over the world very recently here. But outside of the country, it's a different story. As you can see from this article on Reuters, Russian spare banks' European units are failing due to the war's impact, is what the ECB is saying right now. Several of their European subsidiaries, which are majority owned by the Russian government, they're failing or likely to fail due to the war and the sanctions. Partly because of this rapid deposit outflow within just the last few days, unlikely to be able to pay its debts or liabilities. Now, like I said, while this is imposing big pain on Russia, especially short term, we have to look at what this is doing to the entire system. And this will cause missed payments. This will cause entities who are relying on hundreds of billions of dollars to not be able to get them. This is also causing a squeeze in commodity flows. Now, obviously, these sanctions are not in full yet. Iran and North Korea are the only ones who have gotten fully locked out of SWIFT before. Russia still only partially, but at this point, we are still seeing massive volatility all around the world as a result of a major financial player suddenly being forcibly removed from the system. Again, Zoltan Poszar, repo market expert. He was there during the Lehman crisis, there right before the September 2019 repo market blow up here, warning that this is, central banks need to stand ready to make markets on Monday again, saying, hey, if central banks aren't ready to go with printing money by the trillions, ready to go, injecting into markets as a result of not only all these dollars missing from the system now that the major player, Russia, has been removed, but also all the knock-on effects of that. We need to have central banks ready to go. And last time he warned about a big warning like this, it was in December of 2019, just a couple of months after the September repo market blow up, and central banks listened to him. That's why we don't hear about another December 2019 repo market blow up. It's because he said, hey, there's some big problems right now. Within the next couple of days, things could be happening. Central banks listened, especially the Federal Reserve, and nothing happened as a result. They were ready. They printed a bunch of money, injected it in, used the swap lines, used all of the tools that they had. And right now, as of today on Monday, the Federal Reserve has already opened up its swap lines. FEMA, which is their Facility for Foreign and International Monetary Authorities, they have already started using these in order to make sure that anybody who desperately and quickly needs dollars around the world can get them. The reason for this is because we are already seeing money market spreads jump towards pandemic panic levels. Look at this massive jump that is really, we've only been up there since when in early 2020, when everything started to blow up, and we're already seeing a massive spike back into those levels that we haven't been there since early of 2020. Now, what does all this mean? Well, number one, lots of volatility ahead unless we start to see news of a ceasefire, unless this pain imposed is just too much for Russia and they say, you know what, all right, we're ready to negotiate. Whatever happens, who knows? We can't predict the future. But if tensions continue, if military action continues, if sanctions continue or escalate, the pain and the volatility that we could see ahead of us is drastic. Second, it's not just limited to Russia. Like I said, inside of Russia, not that much of a change right now. It's just their ability to transact globally. This also means that Europe is in a very fragile position right now, especially the banks in the Eurozone, which their balance sheets are extremely fragile. When you have unexpected moves happen, when you have major finance players moved out of the market, when you have spreads starting to widen unexpectedly, when you have missed payments and defaults, this is what causes balance sheets to do something that the models said should never be able to happen, because models by definition can only predict something that's predictable, not something that is unpredictable. And so it is very possible that as a result of this, we see major institutions in major trouble within days. This is not something that takes months or years to happen. This is something that takes hours or days. Now further, and I've run out of time here, so I'm going to have to make another video about this. This is basically foreshadowing the death of the dollar as the global reserve currency, because like I said, the pain inside of Russia is not as great potentially as the pain outside of Russia, especially in Europe. It also means that Russia is going to be seeking every avenue possible to get around this, which is mainly China. They have a system in place that is similar to SWIFT that Russia might be able to rely on, and they already have the infrastructure built to partially rely on that, which means that as we speak, as we sit here and watch these events unfold and see these sanctions rolled out, we could very possibly be witnessing the death of the dollar as the global reserve currency, as the incentive to get around SWIFT and to get around using and relying on dollars is unfolding before our very eyes. I'll go into detail on that in my next video. Hopefully I will get that up within the next couple of hours. And finally, my video upload schedule might be a little bit irregular towards the end of this week. I'm going to be in Dallas. I think there's still time to get a ticket if you haven't yet to the Dallas event. We're going to have a bunch of great speakers there. It'll be myself, the Economic Ninja, Andy Schechtman from Miles Franklin, Bill Holter, Craig Hemke. We've got a great lineup. It's going to be a great event. If you can join, sign up link is in the description below. I'd love to see you there. As always, really appreciate you guys. Thanks so much for watching. Have a great day.